Good afternoon. Today is Friday, April the 14th. The time right now is 13 minutes past noon. Overnight on Wall Street, we see that equity prices continue to charge higher on the basis that yesterday we have the release of the producer price index. Now remember, the day before on Wednesday, we have the release of the CPI numbers. The headline numbers was very, very good because in February, the CPI numbers, the headline numbers was at 6%. And for March, it was 5%. So it is a vast improvement because there's one whole percentage point improvement in the headline CPI numbers, and all the other core numbers came in within expectation. That means if prices are cooling down. Then yesterday we have the release of the producer price index, or what we call the PPI, which was also very good because for the first time in a year, we can see that producer price index is actually going negative. It's no longer growing, it's actually going negative. So this is on balance. When you combine both CPI and the PPI numbers, it does shows that inflation is definitely coming down in a very obvious way. The question is, will the Federal Reserve take this set of number and decide that maybe they should pause at their next FOMC meeting, which is scheduled on May the 3rd. So the market believe that the Federal Reserve now have the reason to pause and maybe even pivot. So that is the reason why equity prices is rising. So this is the basis in which they think the Fed is going to take its foot off the gas. But that is a very dangerous assumption. What if the Federal Reserve continue to hike, which they have claimed that they intend to do so? So why is the market betting against the Federal Reserve, which caused equity prices to rise the way it did? So as a trader, you got to be very aware of this sentiment. The whole market is trading against the Federal Reserve. They always say, do not fight the Fed. So now, technically speaking, the Dow Jones right now is at its highest prices since the mid-bottom low at 31,430. Okay, now the market is traded high yesterday night at 34,055. This is getting very, very close to my target range. In fact, this is getting very close to the February high of 34,331. My target is about 34,400. So based on risk reward, it's getting to be a little bit heavy if we continue to chase the market ever higher. So be very aware that tonight is Friday. It is the day before the weekend. There should be some kind of profit taking. So be very, very careful trading tonight's equity index. So in the S&P 500, the same sentiment that underpinned the Dow Jones is also evident in the S&P 500. So much so that the S&P 500 has traded into a bracket of prices which I deem to be very susceptible to selling interest. The price range is 4,140 to 1,159. So the high traded last night was 4,150, well within this bracket of prices and very, very near towards the February high of 4,195.4. So again, take that into consideration. Always look in perspective. Okay, over in the Nasdaq 100, this market is basically trading in its own universe altogether. We can see the price has been very, very stable. In fact, the high traded was last Tuesday at 13,204, and this entire week we do not have any market that actually trade to the upside, except for yesterday when the market technically broke above the very minor resistance line to trade to a high of 13,124.4, very, very close to last week high. So upside is still possible. We may see a price break above 13,204 towards 13,720. But once you get closer to this level at 13,720, it becomes very, very vulnerable, okay, to selling interest. Do be aware of this chart point here. Over in Asia, we can see that Hong Kong managed to rebound from yesterday's low of 19,885, and we can see prices currently is trading above 20,000 again. But I have this idea that the rebound from the March 20 low at 18,829 all the way to the high at 20,750 may have already completed. So this is a three-wave classical corrective pattern, and it hit almost hit my preferred range of prices in which I think you will come under selling pressure, and prices has come off since. So I think technically speaking, there is a possibility the downtrend may continue from here onwards. The market may have already peaked at 20,750. So this is my opinion. Okay, so we will have to see whether over the next coming weeks we will see lower prices in the Hang Seng. Now over in China, we have a different set of dynamics. Okay, Chinese economy seems to be doing fairly well. Okay, inflation is actually very benign, and growth is actually becoming to be very evident. So we can see that foreign interest in Chinese market is coming back again. So this could be underpinning the Chinese equity markets. This is the CSI 300 4 hours time frame. Although we have a rather similar three-wave rebound from a March low of 3,935 to 4,132. However, I do expect that there could be still remnants of buying interest. They may still want to take the equity markets in China higher. So I will basically watch this market and see where how sentiment is going to pan out over time. Over in energy prices, we saw for the first time a much more visible retracement yesterday. The high traded was $83.49 in the crude oil, and that was on Wednesday on the release of the CPI numbers. So yesterday's PPI numbers, although it was favorable, did not cause the same kind of enthusiasm. In fact, prices start to slide back, and over time, I think the $81.25 could actually offer some kind of immediate support here. Do not expect a very deep correction because I've been waiting for so long. It just did not happen. So I did not expect it to happen soon. So $81.25 is possibly where it will actually hold. Technically speaking, my target for this run is about $88.60. So we are getting maybe perhaps another $3-4 to get to those levels. So watch out for these levels. Okay, over in the gold market, we saw another surge higher yesterday night to $2,048.80. So we can see there was a minor pullback, but prices are back up again. Currently it's trading at $2,046. So whether or not it can actually take the market higher, I think it will. My target for now is $2,073. So watch out for this level. Once this level is hit, be very aware that we may be seeing a very sharp reversal back to where it actually originated at 1,982 levels. Okay, so watch out for the possibility market will surge back, surge all the way to my target of $2,073 and then experience a very sharp reversal. Do watch out. And over in silver, we see silver prices continue to charge along. This morning we still have new high at $26.07. And very little pullback. If there's going to be any pullback, it will be contained at about $25.14. Upside target is getting very close by about $27. So we have to be very careful chasing this market ever higher. Over in the dollar itself, we can see because of the very good CPI and PPI numbers, giving the market the idea that the Federal Reserve may actually start to pivot. That caused the dollar to sell off, and we can see dollar index now has broken the year low at 101.09 and is currently trading in the 100 levels. The last low traded was at 100.47, which is within my bracket of prices in which I believe there will be some buying interest. So far, there is no evident buyers have come back in yet, but this is an area in which I'll be watching out. This area is 100.42 to 100.82. So do watch out for the possibility. Maybe we can see some kind of buying interest going into the weekend. Of course, when the dollar comes off, the other currencies will start to rally. We see sterling managed to go above 125.25 to a high of 125.45. Not much higher. It's getting very close. My target of 1.2660. Let's see whether it can have enough momentum to go all the way there for maybe another 100 pips before a plateau. Okay. Euro dollar is again, despite my skepticism, continue to charge higher. Now it's at 110.75. Again, it's getting very close to my target range of 110.90 to 111.30. So very close by. So watch out for possible selling interest to re-emerge. If you're holding on to buy position, then maybe you want to be very careful. Okay. The one that surprised me was actually the Aussie dollars. The Aussie dollars did not come down to all the way to 0.6565. In fact, it actually rebounded back to just under 0.68. And this is quite a bit of a move here. So based on that, I have to re-study the structure of this move here. Now, this is a possible alternate view, three-wave move. Now, the market may be targeting 0.6850 to 0.69 even. So again, this could be the short-term target here. Okay. Dollar yen continued to slide, but did not slide as much as the dollar index itself. From 134, it slid to 132. So this is a 200 pips movement, and this is a three-wave. And I basically sell off, buy back every short that I've actually accumulated, making a little bit of profit. Now the market has a possibility of running up to 134 134.75 to 135.70. So this is a possibility the market may actually trade higher instead of lower. Okay, over Canadian, this is very much like what we see in the dollar index. Prices continue to slide, and there is a possibility it will go down and test the year low at 132.70. So do watch out. It's not getting to be very, very profitable to continue to sell dollar. Or on the other hand, it may be worth our while to look at counter trend now. Now, in the Bitcoin itself, we can see that Bitcoin continued to charge higher. This morning, we have a high of $30,923. So this is despite the fact that the market, although it was in consolidation, started to break out on Tuesday, and it has never quite looked back. Based on this momentum, I think the market has enough energy to actually try to go to the 32,000 to 33,000 level. So in the meantime, the upside is about 32 to 33,000. Okay, so in the meantime, do watch out. This is all I have for you. My next update will be next Monday. And in the meantime, have a great weekend ahead. Bye bye.